guys, welcome back to Bears and Bulls. Everybody had a good week last week, I hope. We're going to do a little Sunday recap and what we're looking forward to the upcoming week, and talk about a couple of things here. I think we added four, five, six stocks last week to our different portfolios, which is great. Um, there's no rush to get these fully up and running. We're going to add just a few at a time and see what the market's doing. So happy with the way that started off. And for those picks, make sure you go to our stock alerts, trading alerts that you'll see in the shorts on YouTube here, and you'll also see them posted on TikTok, and keep track of those. So today we're just going to look at a couple things. We're going to go back to our little friends there at RNTR Trading. If you watched the first video I did, that's what sort of spurred to get these channels going, as I have a friend that was involved with RNTR Trading and really got taken advantage of pretty badly. And when I looked into it and saw what was going on, it was just everything about it sat wrong with me. So I started giving my advice to him, and I thought, well, why don't I just get a channel going and give advice to everybody? It's free, and never hurts to hear what I think or what somebody else thinks, so you can make your own decisions, take care of your own money, and create your own wealth. So as you can see here, the screen I have pulled up is this is Chipotle Mexican Grill. This is on TradingView. You can see it up top here, Chipotle Mexican Grill. And so these is just let you know, my friend still is a member of the group. He told them he was going to quit, and he told them why. And they said, too bad, you have to finish out. You signed up for 3 months. You have to finish your 3 months. We're not going to refund you. So I guess another sign of a bad organization is when they refuse to you go through what he went through with the guy that runs it, and he won't give you your money back. Again, this is probably, if you listen to him, he's a multi-millionaire, if not a billionaire, from his trading, and he won't give my buddy back his $100. So something doesn't make sense there. So Chipotle Mexican Grill was a big buy for him last week, and you can see where he bought it. You bought it right around there, and so we're on the daily chart, $50. This lines up with our momentum strategy, so you can see here that he bought it. There's two ways we can look at this one. When we see that big drop like that, what are we looking for? Well, that's our bungee cord strategy. We see that big drop, and we believe there's going to be a bounce back, so we're looking for our bungee cord strategy. So it bounces down here, all in this area here. We would be looking for our bungee cord indicator, and you can see here the indicator would be this green buy in this circle, and we didn't get it. So this does not meet the criteria for our bungee cord strategy. So it's a no buy for us at that point. The other way we can look at this one is a little bit like I think what he did. And he looked at it and said, okay, it looks like it didn't get the bungee cord, so we're not going to get that big bounce, but maybe we're going to get a bounce enough to make a couple bucks. And so what we see is that it does meet our criteria down here. Okay? And if you look at our momentum strategy, this is exactly what we're looking for. Dark to light, moving up, moving up. A light to dark. And then we got the lighter pink moving into the green, and we get our, down at the bottom there, we get our buy signal. We're on the 1-day chart, and that matches up right where he is. So his buy wasn't bad, where his buy was. So we can agree with that buy. But then look what happens. What are we looking for to get out? We're looking for when we get 1, 2 in a row. We didn't get them up there, so we got no confirmation. 2 light green in a row. So down here we get a light green and a light green, a light blue and a light blue. There's our out. Okay, so we would have been out of this one 42.72. We would have been in at 43.53. We lost very little money, and we're out very quickly. You can see a downtrend is starting here. This is getting lighter and lighter and lighter, so it's going to be a dark downtrend there. Lots of negative poor volume. It's on a downtrend, so there's no positive aspects of this trade right now. So we get out of it, and we wait for the next trade. Maybe he's looking at it in the 3-day. Let's go to the 3-day. We don't trade $45 stocks on the trade on the 3 day. But okay, all the principles still apply. Um, and I haven't looked at this yet. So it looks like we've hit a bottom there. We're just going to clear the chart. We've hit a bottom here. So now in there we are looking for a green buy signal. Our green buy signal is up there. So that's where the green buy signal is. That's the area that we would have wanted to see it in. So again, no buy for us. Okay, that is not meeting our criteria to buy on the Bungie strategy on the 3 day. What else? If we look at the 3 day, do we see any other trends here? It's slowly working its way back towards green, so light colors, and we're expecting it to go green at some point. Just like back here. Let's say a look. Uh, yeah, I'm not seeing anything there at all. There's just nothing trending. There's nothing. It's gaining a little bit of momentum. It's getting momentum, but it's still dropping down, which is not a good sign. When it gets momentum, you want to see it slowly moving up. So this is a no buy all the way around for me, and and they'll still be into this one for a while. And I'll show you the reason why we get it. We talked about protecting capital, and when you don't protect capital, you get really risky. Not to say we wouldn't get back in on this trade. We're seeing a downtrend now, so we bought it here, it didn't work. We got out here, it didn't work. We could be getting another big like that. Maybe this is the area we're looking for. And if we get our indicators down here, we'll buy it. We're not particular to stock. We don't care about Chipotle itself. We care about the patterns it creates and the technical analysis. So this will probably give us another opportunity at some point to get in, but certainly not right now. There is nothing, no positive indicator whatsoever right now to be getting to be still in this trade right now. And I'll tell you the reason that we get out of this trade, and the reason we get out is looking at this one. So this is UNG. This is another heavily purchased stock in the RNTR portfolio. Again, my friend is caught in this one, and you can see what happens. So again, we're on the 1 day chart, and this was the buy area for the RNTR strategy. They went in very heavily here, and actually there's another buy area up there. I didn't notice that one, so let me just make that one a little bit bigger. Okay, so these are the two buy areas for RNTR strategy. Their strategy is they invest either a full position or a half position or a third position. And if they invest half a position, they're looking to add on to it at a later point, whether it be an uptrend or a downtrend, to bring their average buy price at even a better spot so they can make more money. And so what they did here is this is their first buy up at 1632, and this one here, we're on the day because it's a $16 price. We're on the day. There is no reason in the world to be buying here. What we're seeing is we're going down on the green, we're going down on the blue. It's not hit. There's no Bungie strategy here because there's no fast bottom like this one here. Might have been a fun, that would have been maybe an opportunity for a Bungie buy with that big drop there, but we're not even going to look at it because there's just no big drop here. So certainly doesn't meet the criteria for Bungie. It doesn't meet any criteria for momentum, and this kind of stock doesn't meet any criteria for big dog strategy right now. Natural gas itself does meet the criteria for big dog. Natural gas is great. This fund here is a very it's not a very good fund. It's a very short-term holded fund because of the products that it uses. They deteriorate very quickly, and so I guess what I'm saying here is even if the stock didn't have any movement at all, you would lose money on it because the underlying products within the fund lose value. So you need this one to, it's a very short term and you're looking for it to move up very quickly. And you'll lose up to 10% a year, roughly 10% a year in just deterioration of the products within the fund. And so you just don't, if you're going to buy natural gas, you want to buy another one called UNL, or you want to buy an actual natural gas stock. Go and buy a big, solid natural gas stock. It's going to move. When natural gas goes up, it's going to go up. And it's just a way better way to do it. So This fund itself is just is garbage. But so we buy it here with absolutely no indicators in our on our boat to tell us why. If anything, you can see here, he bought here. Well, let's just say, you know what? Sorry, maybe I'm wrong. So look at right here. Maybe that's a buy signal for us, and that's right here. So we would have gone at 17. We would have been out at 16. We lost 5%. Big deal. We're out. We avoid all this downside. He they bought it at our sell point. So you've got one, two. So right here, light green, light green, light green, light blue. Boom, right there. That would have been our sell point. Okay, that's our sell point right there, right where they almost right where they bought it because of what's happened. Look what happens afterwards. Look what it does. That would have been our sell point. Instead, they hang into it and they're going to ride this dog with fleas all the way down if they have to. And they get down to this point here and they buy again. So they bought at 1651. They bought again at 1374. They're doubling down on a loser. And you can see what happens here. I'm sorry, yes, right around this area here. So now it brings their average buy. They bought in at 1639, 1371. Their average buy is this yellow line around $15. Again, do we see any indicator of a buy signal here? Right here. No. This is a sell. This is a sell area. Down here, look. We're not seeing any momentum building up. We're not seeing. There's no bungee. There's just nothing going on there positive to be buying again. The buy area would have been over here, and we would have been getting out around here. So if we had traded this stock like them, we would have lost 5% and 15 down to 14. We'd have lost another 5%. So there you go. So we're down 10, 12% on this deal. And right now they are 14 down to 12. They're down 12 to 15% as well, but they've got all their capital tied up. We're down 12 to 15%, and we're putting our capital to work somewhere else right now that's going to make us some money. Instead, they're going to ride this dead dog down even further. Rode it down, 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 and we're getting a little bounce back here. And I haven't followed up my buddy, but I almost guarantee you they're selling out down here. They've finally given up at 1181, where their first entry was, the first entry was way up here at 1660. So they're down 40%. In the hole. Look at where they got to come to now. We're seeing a nice little bounce back now, just a little bit like that pattern there, and right here. So maybe we will start looking at this one actually. I'm going to add this to my watch list here. The little bounce there. I do like natural gas as a whole. I own Comstock. I don't play the natural gas fund, but you can look up the symbol for it. But I own Comstock. It's the best natural gas equity play there is out there, and I'll be looking at Comstock and where it's at. But if I'm looking at this right now, look, we're getting lots of positive signals on the day for this one. Back here, we got a nice one-day momentum buy strategy signal right in there. And if we are looking at it now as maybe a bit of a bottomer, yeah, look at that. It's not too bad. We've got one little green buy signal just inside of our circle. So there's a nice little soft buy signal there. So it looks like on this one here, we probably, if we had it on our list, we would have been into it right around this area. That shows momentum and bungee. We're showing that that's a potential buy area there. And that's probably where we would have been getting in. But it wasn't on our list. So again, you don't want to ride these dead dogs. Just get out. There's hundreds and hundreds of other stocks out there to play with, and you don't need to be involved with something like this. It just doesn't make any sense. So you're gonna have to have three winners in your bag just to cover this one loser when you ride it down that far. If you got out right up here, you only need one other winner in your bag to cover this loser, and the odds just aren't against you. You're gambling at that point. And this is another one I want to warn you guys about is UVIX. This is just a crapshoot Vegas type trade that has no right being in anybody's portfolio. And for two reasons. I'm going to tell you, well, the biggest reason I'm going to tell you is this is what they call a leveraged ETF. So I'm going to let you guys go and do your research on leveraged ETF. But it basically means that you're making a bet with money you don't have. Okay, so this one works that when the market goes down, this ETF will go up 1.5 times as fast. So I'll say that again. It's betting against the market, say against the S&P. When this goes down, sorry, when the market goes down 1%, this ETF will go up 1.5%. And the details of how that happens, I'm not going to get into. There's all kinds of products within this ETF that make that happen, but that's the goal of the ETF. The problem is when the market goes up, this product, this ETF, will go down more than 1.5%. More than 1.5%. Because it's again, it's leveraged to 1.5, but it also deteriorates very quickly. The products inside this ETF deteriorate extremely quickly, and this kind of thing shouldn't be held for much more than a few days or even a week at the most. But if you hold it for a week, you could lose 1 or 2% just off the deterioration of the product, on top of any of the leverage, the leverage. So just a terrible, terrible product as an investor and a trader. This is more for, a hedge fund manager might use this as a bit of insurance, but it's just something you just don't want to be involved in. This will wreck wealth much faster than it will create it, and you won't even realize until you're so far in the hole that and this is what's happened with this one. Now my buddy did not, he got out of this one very early, which was great. But you can see what's happened here. So um, he got into it back here, and really we didn't have any we're getting no signals at all here on anything. Like, it's just flat, everything's flat. You can't, there's no signals here, you don't know what's going on. There's a signal back here when it was underwater, and it came up to breathe, and it didn't do anything. And then, look, you got, this is what they're hoping for. This is the Vegas part of it. Everyone's hoping for this bump here and that bump there. That's what everyone's hoping for. Back in the middle of 25, when it went from 28 to 49 in 3 weeks, or it went from you know March 26th to April 9th. It went from 26 to 93. That's what they're all hoping for. But much more likely they got caught in this when it went from 43 down to 12. And that's what this guy's doing. He's just riding that one to the death. And again, another dog with fleas that very, very little chance of making money back on this one. I wouldn't be surprised if they're getting out of it at this point. But they got in at 1693. And now it's sitting down at 1190. Not even 2 weeks later. So again, just a way to lose money so fast. You want to stay away from any of these kind of products. That's not investing, that's gambling. You might as well go to Vegas and throw it all on black. um, so um, another reason that we get out early, let's just say we did buy in on this one. So say we got a very light buy signal right there. We got a very in our momentum strategy, green signal. Okay, let's buy in. We would have bought in here. Um, and then right away, what do we get? We get light green, light blue, dark blue, light blue, light blue. So right there, we got our exit point. Okay, so right there, we would have got our sell signal, confirmation of a sell signal with two blue in a row, and got out there. So we would have got in at 19. We would have got it at 16. We're not happy. We lost 15%. But what we didn't lose is 17 down to 11. We didn't lose 40%. We took our little 15% loss, took that capital out, put it into something that was productive at that point, and made it back. Probably made 10-12% back right away on our next one, instead of letting our capital ride and with a dead dog, a dog with fleas, all the way down the bottom. So again, terrible product, terrible buy. and terrible hold. That's the worst out of all this is holding these dead dogs and hoping that they're going to be revived and they just don't. You know, it's just bad trading to not understand where your losses are. So and then the other one's CMG. This is the Chipotle Mexican Grill, and this will be interesting. We're gonna follow this one to see who's right. I could certainly be wrong, but so they said they got a buy signal on Chipotle Mexican Grill, and they bought it last week, and we want to take a look at it from our point of view. So our point of view is what do we see here? We're seeing a big drop. We love that drop. Sorry, guys, we did already cover this one, didn't we? Yeah, I just saw my notes there. I apologize. But you can go back and look at it. We don't get any buy signal, and we're going to follow that one to see how it ends up. Okay, the other thing we're going to talk about is you'll see a lot of stock or investment advisors on YouTube and everywhere else talk about diversification and talk about that you don't know what the market's going to do, so you put a little bit of money into everything, and that way you're not going to lose because you're invested all over the place. That to me is just that silliness. That's saying I don't know what I'm doing, and so I'm not going to lose because I'm going to be into everything, and at any given time I can point to some area of my portfolio that's doing well, and it's because you're involved with everything. So of course it's going to do well. You know, you got equity and you got bonds, you got money market, you got every sector imaginable. You know, when the market's going down, bonds are doing well. Oh, my bonds are doing great, but you're getting killed in equity. So the whole idea of technical trading and taking control of your money is to use some intelligence, use your education, and not be in the areas that are going down, and be in the areas that have the most chance to succeed. And one of the ways we can do this is by looking at ETFs and sector ETFs. I'm not going to go into what an ETF is. Just do a quick Google on that one. It's an exchange traded fund, but very basically it holds a basket of stocks. So an ETF, we're going to look today at an ETF I'm going to be buying this week probably, and this is XBI. This is S&P Biotech ETF. So all this ETF does is it has biotech companies in there, and it might have 20 or 30 or 40 or 50. I don't know. I haven't looked at it yet. So it has like 40 or 50 companies. So instead of buying one company, you're buying 50 companies at one time inside this ETF, and you're spreading your risk over those 50 companies. So if one go, you know, if two or three are on tough times, but 45 or 48 of them are doing well, you know, you're not going to get too hurt in this. And one of the things I like to do when I'm looking at the market is go through my sectors. And there's always a sector that's going to be down, and there's going to be sectors that are going to be high. Obviously, with the names Nvidia and all these Mag 7 guys, like tech is very, very high right now. Um, but there's areas that aren't so high that are gonna pull and catch up a little bit. So one of the ways we can use ETFs, I use ETFs mostly in the momentum trading strategy and in the big dog strategy, is to go through your ETFs and see where there might be some opportunities. Now, I'm going to leave this up here so you guys can screenshot this. These are my core sector ETFs, and that would be, if you look up at the top side here, you'll see what each one is. So communication is one, industrials, utilities, financials, uh, healthcare. So the big sectors that we look at. And then down here, they even get more specific. So you can get the pharmaceuticals ETF, which will be inside the healthcare we just looked at, but it's even a more specific ETF. Semiconductors, and so instead of just being in the tech, it's in the semiconductors. So just the semiconductors will be in this one. So you can even get more aerospace and defense. So you can get more specific as well. So you might want to screenshot. I'll leave that up there for a second if you want to screenshot that. And there's the bottom side if you want to screenshot that. And then the core sector ETFs are up here if you want to screenshot that. So one of the things I might do is say, oh boy, the biotech looks like it's doing well. You know, or where's my healthcare? Sorry, um, there's a healthcare in here somewhere. So I might let's take biotech. Hey, biotech seems to be doing well. It seems like I have an opportunity to come back. That's kind of interesting. Um, then we're going to chart it just like we would our other stuff. So we're going to live chart this one right now. So Again, $90 stock. That's usually a day trade. Biotechs I'm going to do on a 3 day because I want to see a better. It gives me a better trend of what's going on when I look at it on a 3 day. And then I'm going to really pull back, zoom out. Zoom out, zoom out, and let's take a look here. Do I see any trends? I see a very big uptrend from 2010 to 11. Looks like that's when the stock was introduced back in 7, 8, 9. So it got very popular in this time here. And then it probably started its real trend. That, sometimes that could just be it's a new product on the market. People are throwing money into it. Let's get it up and running. Then it gets up and running and starts sending its trend. So this is just the way I would do it. I would take a line here and say this is what I. Whoops, where are we? This is, for me, is what I believe its trend is right there. That a top there, a top there. I'm gonna copy that line. I'm gonna move it down here, bottom there. So there's a bottom here, there's a bottom there where it's touching, and that's what I believe this trend line will be long term, and that's the middle of it. So you can see since 2022 and a half, it's gone a little bit flat and it's starting to move up a little bit. My expectations on this stock here would be that it's going to start trending upwards and come back into that trend line area. If we just extend this a little bit, you see how now it comes back into that trend line area. So that's my full expectations of what's going to happen to this ETF. So I'm kind of interested. It looks like it's been underperforming for quite a while. Might be some nice opportunities in this one. So let's dig in a little bit deeper. What do we see? Okay, on the 3 day, it got a momentum buy signal right there, which is great. It looks like, oops, sorry. If we had been on our radar, look at that big drop there. So that would have been an opportunity for a bungee buy. Back here would have been an opportunity for a bungee buy. We're on the 3 day, so let's go down one time frame to the day, and look at that. Look, there's our buy signal right inside of that circle. So we would have been buying there on the bungee, and we did not get a bungee back there. I think I told you when you go backwards, you see how the indicators stop right here. Sometimes they just for the amount of information that they're carrying, they can't go back too far on the chart. So they didn't go back that far, but at that time it would have pulled up a signal for us, and I'm going to say we probably would have got one in there just like we did here. But what a great opportunity here on the bungee strategy to get in at $69. So say $70 and go up to $83 within April 9th to May 1st. So within 2 to 3 weeks, tremendous opportunity. Excuse me. And so that would have worked on the bungee. We don't see any bungee opportunities here. All we see is that a little while ago there was a buy on the 3 day in our momentum. So it might not be too late to get on this one. You know, certainly it looks like there was a top up here. You can see where it came up, bumped off, it came back down, came up, bumped off, it came back down. So they call that resistance, and there's no reason for that other than technical trading. Nothing to do with the stock itself. It's just a bunch of people like me look at it and go as the price approaches this area here. They go, oh, you know, look, it was showing resistance. Let's get out for a little while. So then everybody gets out, and that's just a technical trading term that makes the stock go up and down. And so my expectations here would be that this stock is going to continue to move up towards there. It's going to probably come down a little bit, and then what we're looking for is it to break out, come back down, hold that line, and then go again. That's what I think this stock's going to do. So that's on the 3 days. So now all of a sudden this ETF has my interest, because I think that's an opportunity right there, and we could ride it from 90 to well up over $110. Let's just pop down to the day. Now we're on the day chart, and we see it's still a buy on the day chart. So there's our buy signal way back here. That would have been our 3 day buy signal. There's our day buy signal, which we might have been, we can certainly use the day on this one. It's $76. It's under $100, and from previously that under $100 I like to use the daily. Over $100 I like to use the 3 day. The reason I'm using the 3 day on the ETF is because it's a slower moving, much slower moving than a stock, and the trends are better defined with an ETF because there's 40 or 50 stocks in there. The trends are just better defined using a little bit of a longer term period. So that's the only reason I do it, but you certainly don't have to. All the principles of our trading strategies apply to the 3 day as well as the day. So you can see on the day we're still in a buy zone. Nice. It's been doing a typical pattern where you can see it's been going up and holding this EMA. We talked about the EMAs way back there, so you can see this light blue and dark blue EMAs, and it's been coming up and bouncing off them and holding them very nicely. There's an opportunity where it could have gone below. It didn't. It went up. It came back down. It held it again. Went back up, and it's still holding it. So we like that. And so I like this one. I think we could do well on this one, and I'm going to put this into my buy category right now and wait for my next firm signal. And that will probably be. I just went down to the day there and take a look at this chart. So let's just look at this from everything that we've been doing. What would be my next signal to buy this one? What am I waiting for to see before? Now that I like it, what am I waiting to see? What I'm waiting to see is we're on our downtrend here. We're going red here. There's nothing positive about this right now. Right, we are looking to see. It doesn't qualify for a bungee cord because there's no hard drop. So this is going to be a momentum play. And from talking previously, our momentum plays. We're looking for those buy signals at the bottom. That one, that one, that one. Okay, that's what we're looking for. Okay. Now we can do that on the day or the 3 day. Like I said, I like to do the 3 day. So that's what I'd be looking for. I might get in on the day just because I want to enter this trade. So if the and this is as we advance along, you'll get a better feeling for this stuff too. I might enter this here on this momentum buy signal, but then pop right over to the 3 day. So that would have been my entry, and now I'd be into it right here on the 3 day, or even the week. We could even move to the week at some point. But I'm not seeing any tremendous momentum here. If anything, you look at all this green; it's slowly going down. That's going down. So my play on this one right now is to wait and see. It's definitely on my watch list, and after just looking at the stuff we just talked about, I'm going to say where I said before that I think this is what's going to happen. I think it's going to be a little bit more like this. I think we're due for one of these and then that. And so what I'm going to do is wait for this area here and hopefully get one of these patterns that happen over there. So that's what I'm thinking on this one. But anyways, it goes into my watch list. So you create a watch list over in TradingView and put it there. This one is going on to my watch list. The other thing you can do with your sectors is use this website, and I'll put a link to this website up as well. So this is worldperatio.com up at the top there. Screenshot that and maybe add that to your favorites folder for your stocks. And this will give you an idea, the S&P 500 sector PE ratios. This will give you an idea of what sectors are fairly priced, overpriced, and underpriced. So instead of going over here and walking through every one of these yourself, and the way I would walk through them, I'm just going to show you quickly. I'd go to a bigger time frame. I'm even going to go to the week here. And you can see I've drawn my channels there, and I would just rifle through these very quickly and see if I see any with a big drop off right now. And middle, low, what's that one? Real estate. Ooh, okay, you know what? I'm going to add that to my little watch list as well. 110.93. Yep, real estate. We like real estate. Um, these are old lines there. U.S. consumer discretionary. And don't mind me, guys. This is just the way I chart. I will draw that line. I copy it, clone it. Sorry. There's my channel. Very narrow channel on that. Down there. Yep, I like that one too. So U.S. consumer discretionary goes on my list of ones that I'm interested in. Healthcare select. Healthcare goes on my list. So we got healthcare, biotech, and consumer discretionary on my list. See, financial is just sitting in the middle there. No interest right now. U.S. utilities. Everything else is on the high side. Materials. We. What's that? Information technology. We know that's rolling. So there's two or three sectors that our charts show us. But even an easier way is to pop over to here and take a look. And this is a great little site. It just gives you the PE's price to earnings. It's one measurement used to see if something's valued fairly or not. And don't even worry about that right now. Go look it up, but it'll just tell you expensive, overvalued, fair. So fair, what did we say? Oh, look, real estate's fair. I just identified real estate. Healthcare is fair. Consumer staples is fair. So I just identified all those three off my charts, and I come over here and it says, yeah, they're all fair. So I just got confirmation on what I was looking at, anyways. So those are three areas I'm going to look at right now. Communication services is fair. And I don't think I even had that XLC. I didn't, because I don't have it there for some reason. XLC, not V. XLC. I don't know why it's not there. XLC, communication services. This is a newer fund, and it's hard to draw a trend line on this one. Because the fund's newer, you can see it was only started back in 2019. And so developing a trend on this one, I'd rather use, I'd much rather use another comm service, another comm communicate VOX, the Vanguard Communication Services Fund, which is just another one ETF. It's showing me that it's high right now, so I'm not interested. Even though this one here is showing it's fairly valued, so I'm not interested. I want I want confirmation. I want my idea and the confirmation, or I want their idea and then my confirmation. I want both of them to be involved. So that's a good way to look at it. You can click up here and get the average. The PE ratio wants to be as low as possible. And as can saying, for instance, real estate, 36 is where it's at. Its 10-year average is 38, so it's below. It's higher than. Um, it's lower than what it traditionally has been, so that's good. Um, consumer discretionary, same thing. And then the deviation from the average, and really it's just showing you what we just talked about, what the deviation is. But this is all you need to look at. Fair, fair, fair. So use ETFs in your trading. Extremely good products. The downside of ETFs are you do pay a management fee. Someone's got to buy these 30 or 40 stocks under that are in the ETF and sell some and manage them. So they charge you a little bit to do that, and that's called an MER, a management expense ratio. Um, and so those can be all over the place. I only use so I'll use the iShares ETFs. I'll use the Vanguard and I'll use the SPDR. And you don't need to get confused. They all do the same thing. They're different companies that put them out. So if you see SPDR, that's a very low cost fund. So you can just do your search for communication services SPDR. Vanguard, same thing. So Vanguard is a very popular ETF fund. That'll be my third one. It would be SPDR first, then iShares, and at the beginning it just says iShares. That's just Think of it like that's the company. So that would be number two. SPDR first, iShares two, and then Vanguard would be three. Low cost funds, MERs are very low. They're not going to hurt you. Um, and so using these ETFs, especially in sectors that you don't have a lot of, that can really fluctuate hard, and that's why I'll use them in biotech. Communication services, not so much. I'll buy the big communication companies. I'm confident enough to do that. And real estate was the third one. Real estate, I will use them. I'll use them, and I'll also with real estate. What I'm going to do this afternoon, and I'll let you guys know a little bit more about it. Real estate's been on my radar here for a long time, and I think a lot of my stocks are real estate have real estate ties to them right now. I think there's a lot of things going on in the U.S. with the government trying to sell federal lands for housing. Taking all the red tape away from the builders to try to get housing up and more affordable quickly. And I think you're going to see a big boom in I don't buy the building companies, but I buy the stocks that the building companies have to use. So I'll buy the roofing company. I'll buy the guys that make the shingles. I'll buy the guys that make the tools. I'll buy the guys that have to go out to the engineering companies that have to go out to these new sites and do all their work before building permits are issued. I'll buy the paving companies that got to put the driveways into these new places. Um, that's where you can do really well. So the housing sector, or real estate, I am going to take a look at now and break it down even further into these smaller ETFs. So I'm going to see if there is I'm going to go through this quickly. I'm going to go through and see if I can find that there's just so there's a U.S. infrastructure ETF. I'm going to take a look at a little bit more about that because those are companies that create infrastructure, and maybe they have to do a little bit with housing. I got a feeling it has to do more with roads and things like that. But that's an example of something that might be under the real estate. So I'm gonna go and see if I can find like an ETF that holds maybe tool companies like Black and Decker and Stanley and all these guys. I could throw Home Depot into this category of I just want to buy the stock that I think will really benefit out of something like this. So yeah, real estate is going to be on my big one today to take more of a look at. So that's how the ETFs work, and it's a nice way to include them into your portfolio and not have the day-to-day fluctuation of an individual stock. ETFs are only going to go up and down 1 or 2% a day. Whereas, if you buy Home Depot, you might see one day where it's up 8% and another day where it's down. It could be down like 10%. You got those really heavy fluctuations, and that's not it for everybody's comfort level. So, ETFs another great way to do the market. And you know what? Let me just show you this. I'm gonna pop back over. Remember Yahoo Finance? That's where we keep all of our that's where we keep track of all of our trading um, that's going on, paper portfolios or real portfolios. And so here's my portfolio using an index trading. Yes, no, that's index 2025, my ETF. So this is the portfolio that I at the beginning of every year I set up a couple different portfolios and let them run for the year. So I have something to base my trading returns on. So I set up uh, I'll set up a little portfolio of just the S&P, just 4 or 5 index funds, whatever it is, and just let them run for the year. And then I have something to compare my returns to, and say if I just put $1,000 into you know if I put $1,000 into a general mutual fund or ETF, how much is it up now in August of 2025? And then I go back and look at my trading, and if I'm not doing as good as that fund, like there's no sense in me trading. I need to do better than that. Other than that, at the beginning of the year, I should just throw some money into a fund and let it ride. So I always want a benchmark. They call that a benchmark to let you know how you're doing. Um, and so in this little ETF here I set up, it's Now, I didn't worry about MERs in this case here because I'm not really trading this. So this is the Vanguard High Dividend Yield Fund. If I was really buying that, actually, I probably would have bought the Vanguard. I like the Vanguard fund. But if iShares or the SPDR had one, I would have bought that instead. So I didn't really worry about too much. I'm in Canada, so I use some Canadian funds here. There's the Vanguard's U.S. dividend appreciation, S&P caps. So this is a very easygoing portfolio. Nothing sensational. But look what it's done this year so far. We've got a 60% return this year, and some good numbers there. Yeah, so that's a real good return, and that's just and what I do inside of those is I buy and sell those just like using our strategies. I buy and sell using the big dog. I buy and sell using the momentum, and I just stick to those 5 or 6 ETFs. And you can see right now I've done 60% in that portfolio just buying and selling those ETFs, and I'm gonna just double check that number, but unrealized gains and losses. So you can't beat that. All right, guys, that's it for today, and we will see you next week.